Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder, and this is BRN AM for Wednesday, October 2nd, 2019. Here are your top stories. Bitcoin isn't the most popular cryptocurrency, and a chief economist predicts that central banks will be using digital currencies within the next 2 to 3 years. Well, folks, it's Markets Wednesday, and it's a time when we sit back and look at a particular asset class or a segment of the market. Today, we're going to continue our conversation on cryptocurrency. Well, let's welcome back to the program Kevin Kelly. He's a co-founder of Delphi Digital Research. Good morning, Kevin. How are you?
Doing great, Jeff. How about yourself?
I'm doing wonderful, and I understand it's a moving day over at Delphi, so we promise not to take too much of your time this morning.
No worries. Yes, it is.
So, my lead-in story was that Bitcoin, though we hear a lot about it, it's kind of like the brand name. It isn't the most popular cryptocurrency. Am I missing something here?
No, I mean, for starters, you always kind of going to take volume information, right? So when you're looking at different volumes or traded crypto assets, you have to take that with a little bit of a grain of salt just because of how a lot of these exchanges operate and how fragmented this market still is. But no, I mean, when it comes to something you're speaking about Tether, which is a reserve-backed stable coin, essentially basically pegged 1-for-1 or supposedly pegged 1-for-1 with the US dollar. The reasons why that sees a ton of volume, and actually competes with Bitcoin in terms of actual volume numbers, is because for a number of different reasons. One is that the fact that it is a stable coin allows it to be typically a lot less volatile than something like a Bitcoin, right? So if you're a trader and you maybe don't necessarily want to convert to US dollars, or you're trading on an exchange that doesn't actually physically let you convert to US dollars or some type of fiat currency, basically you can hold some of your money within, or some of your holdings to be within these reserve-backed stable coins, because again, their purpose is basically to try and mute that volatility that you would experience with other crypto assets like Bitcoin. But the important thing is that I would look at something like a Tether more so as, again, a stable coin, more of a digital currency, certainly not, a decentralized, crypto asset or cryptocurrency like we see with Bitcoin. So it's just important to kind of keep in mind that the nuances and the differences between the two, because again, they are very different structurally.
In terms of due diligence, which is something that your firm helps with and something that I know quite a bit about, how are clients or prospective clients, pension funds, endowments, foundations, retail investors, are they doing due diligence across the spectrum on every cryptocurrency, like a Bitcoin, like a Tether? How does that typically work? Because as I said in my lead up, it's kind of the wild, wild west right now.
Yeah, so I mean that's spot on. That's pretty much what our niche is, right? Us at Delphi Digital. I mean that's essentially what we're doing, trying to give to the market is more clarity around a lot of these crypto assets outside of things like, again, Tether, stable coins, and outside of kind of your world's most dominant crypto asset in Bitcoin. And so basically trying to find where some opportunities are within this space, but again, always being mindful of the regulatory uncertainty. And this, again, still it is. I would say it's certainly a little bit more sophisticated in the market. It has matured and firmed up a bit since that 2017 kind of ICO crazy craze with Ethereum and a bunch of different tokens that kind of came to market with no real purpose. But no, to your point, I mean, we certainly obviously think there's a ton of opportunity within this space. It's just sometimes a little bit difficult to kind of weed through the noise, but what else is going on to actually identify those opportunities.
Well, I think that's why you hire an advisor or someone with expertise, because we're not all experts in every given field. Let me ask you a question. We just finished the Q3, and I know it's probably a little too early to tell, but the crypto market, like the rest of the market, tended to be volatile at some points. What do you take away from this last quarter's returns?
Yeah, so it's pretty interesting. I mean, if you take a step back and you look year to date, right, Bitcoin is still one of the best performing assets out there, right? When you look at stocks, bonds, gold, and what's really interesting getting through Q3, and this is the S&P 500. It's one of its best returns in about 25 years through the first 3 quarters of the year. What's really interesting is when you look at the leaderboard, a lot of assets have simply rallied together, right? So you have long dated or long duration U.S. Treasuries that are up 18 to 20%. 20%. You've got gold that's been up 16, 18%. You've got the S&P 500 putting in, 20% returns. So it's really interesting that you've kind of seen this, people like to call it an everything bubble, and I hesitate to say that, but crypto has certainly fit into that year to date. Now in the third quarter, and really so the last month, we've seen a bit of volatility really come back to the market in this most recent kind of sell-off in the crypto market, which was for a number of, I would say, more technical reasons than really fundamentally driven. But no, when you look at, again, you always want to, one quarter doesn't make a trend, just like year to date doesn't necessarily make a trend, but it is certainly, important to put the time horizon in perspective.
So we talked a little bit about, and I'm sure that you're getting institutional investors, whether they're consultants, RIAs, registered investment advisors, for those who don't know the term, trustees of endowments, foundations. But let's talk about the retail investor, because the average American who's thinking about this, or at least considering this, where do you go to get information on this? And B, are we close to the exchange traded fund makeup? Because I know the SEC, the Securities and Exchange Commission, was looking at this.
Yeah, no, I mean, great questions. First, I mean, if you're a retail investor, it is extremely risky, right? And our most recent weekly note that we just put out actually is kind of one of our headline pieces, talks about this and how this is still an extremely risky market. So you kind of, I advise anybody who's actually trading or investing in this space not to put anything in here that you can't lose, because again, there's always a non-zero chance that a lot of this market does fall apart and potentially could go to zero. We obviously think that's a pretty small probability, but nonetheless, it is non-zero. When it comes to the actual exchange traded fund, and the reason why that's important and why a lot of people are really kind of looking forward to the development and the approval of that is because, again, if you think about the accessibility to other even kind of exotic asset classes, at one point, getting exposure to gold was pretty difficult before exchange traded funds came along in the early 2000s. Looking at Bitcoin, the ways in which people can get access to this is essentially buying it directly or through these other kind of more inefficient vehicles, right? And so everyone's looking forward to this because, again, you could have now advisors, you could have pensions really use a trusted or regulated vehicle to actually get exposure to Bitcoin in this space. And so the timeline is certainly, always a moving target. I think the most recent market volatility here, because, again, one of the SEC's big things is the amount of potential manipulation going on with some of these spot exchanges. I think just some of this recent volatility has probably spooked them a little bit and maybe has extended the time horizon before we do get an approval. But I would say within the next, I would like to say I'm pretty confident in the next 12 months, we'll see certainly some movement on that front.
Yeah, I think there's a lot of pressure by a lot of different people on these regulatory bodies, whether it's for cryptocurrency, whether it's for alternative investments like private equity, or hedge funds or infrastructure, to find their way into retirement programs, because there's trillions and trillions of dollars out there. And, obviously from a business perspective, it makes sense. I just am always, very cautious, as you know, about infusing in asset classes that people don't understand. And yes, you don't need to understand every asset class. It's why you hire a professional. But you also have to make sure that your professionals are free of conflict of interest, that are doing all the right things on behalf of you and the fiduciaries and the trustees within the plan. So a lot to consider there, but clearly it's coalescing, and it's not where it was, even in 2017. I mean, we're clearly moving in a direction. Kevin, I want to talk to you a little bit about some prognostication in our next segment about central banks. Do you have a few minutes to stick around with us?
Absolutely.
And when we come back, Kevin's going to stick around. We're going to discuss a recent Economist theory that central banks will be offering digital currencies within the next 2 to 3 years. Stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms? Especially for the smaller businesses. I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network. Welcome back. Digital currencies still look like the Wild West, and many companies like Fidelity and Facebook are thinking about offering a digital currency on their platform, including some funds are even thinking about offering exchange-traded fund versions of ETFs. But what about central banks? Joining me now, or staying with us, I should say, Kevin Kelly, co-founder of Delphi Digital Research. As I alluded to in our going out to commercial break, several central banks are thinking about this cryptocurrency. And recently, a chief economist for a major financial institution stated that they believe that within 2 to 3 years, digital currencies will be part of a central bank's arms, things that they have to manage. So Kevin, I want to come back to you and get your, I'm not putting you on the spot and saying right or wrong. I want to get your take on this. What are some of the headwinds and where could this work? Because we know that Venezuela has considered it, the People's Bank of China. Then we've got the Facebooks, the Fidelities and others of the world. So where do we all kind of fall out on this?
Yeah, I think again, going back to our previous segment conversation around stable coins and kind of, understanding the difference between that and a true kind of decentralized cryptocurrency like something like Bitcoin. I think, when you talk about digital currencies, right, and it's interesting to kind of put it in that context. When you think about using the dollar today, right, I personally don't use a ton of cash. Cash is kind of going by the wayside. It's still heavily used in a number of, especially kind of developing nations as well. But cash is certainly still, king, you could argue. But at the end of the day, a lot of people are moving away from the actual physical, fiat paper currencies and moving more towards the digital currency route, right? So the transition wise, yes, there'll be different mechanisms for central banks to be able to issue these things and the ways in which they'll interact with wallets and potentially digital assets. And then eventually you could imagine a world where you'll be able to kind of manage all of your exposure, in one simple kind of platform or wallet, right? Where you're holding some Bitcoin, maybe you're holding some Ether, maybe some other crypto assets that you're personally invested in. But at the same time, it can also serve as a fiat-based wallet, similar to like an Apple Pay or something like that. I think that's the world in which we're moving to. The other, I would say some of the headwinds or potential concerns around this is, and we'll use China as a perfect example because they're certainly much farther along than most other countries in developing this. It's still going to be a fiat-based currency, right? So it's basically just digitizing the currency itself, but it's still going to be very prone or susceptible to domestic monetary policies, right, by the PBOC. There's also a lot of potential concerns around the increased surveillance that they could have, because again, if they're able to put this on, whether it's they actually use some type of blockchain technology or distributed ledger technology, actually creating, a central bank digital currency would allow them to basically be able to see, at least in aggregate, a lot of the transaction information that goes on, right? And there's different privacy implementations or technologies that they could implement on top of these digital currencies. But again, I think largely it's going to be, potentially a lot of questions around what the increased surveillance could be around some of these things, especially at a time when you're seeing, today is a perfect example, where you're seeing a lot of political unrest, especially in the kind of Hong Kong versus, mainland China debate. So I think there's a lot of concerns, certainly, but there are a lot of potential opportunities and benefits that a central bank digital currency could offer that your traditional kind of fiat currency system today doesn't.
Yeah, I mean, it seems to me, as a layperson, but knowledgeable about markets, that it's almost like fiat currency on steroids when you have a China or Venezuela or some of these, or United States. And, there's opportunities for trade. But also, it also could be that a digital currency replaces the US dollar, which is the medium by which many companies, many countries and trading partners trade, and it's the benchmark for the US. So I think that's a potential change. And I'm just wondering if, the European Union, the European Central Bank, the PBOC, others, I could see everyone's kind of got a vested interest in one or the other. On top of that, you have organizations, Wells Fargo, Fidelity, Facebook, jumping in here. And are we going to get to a point where, we're back to using tobacco or, little ceramic trinkets that double as coins, right? Because it almost feels like that. Okay, well, you're using Bitcoin, I'm using Tether, or I'm using the PBOC's currency. How do we connect that? How do we translate that? I mean, that seems like a lot of work to be figured out.
Yeah, I think an interesting idea here, and this is kind of, this is much longer term, but if we go back to the idea of having kind of all of your assets, or let's say, a portion of your assets within a mobile digital wallet, right? You could imagine a world in which, the back end is basically developed and it's gotten so efficient, and the UX, the user experience, and even the user interface is very seamless, where you could go and use, let's say something like an Apple Pay, but it's pulling from that wallet. You can kind of almost figure out or decide, how much of each, whether it's digital currency or crypto asset or something of that nature, or eventually even, digitized or tokenized assets like stocks or bonds or, portions of real estate. You actually pay for, certain things or transact certain things and basically, decide how you want that divided up. Now, that's certainly a much longer term kind of, ideal world view, but, kind of bringing it back to what the potential benefits of this system could be too. I mean, if you think about the transition mechanisms in which, monetary policy works today, a large reason behind the lack of inflation over the last, really the last cycle, despite so much quantitative easing and money getting essentially injected into the system, is a lot of that money actually ended up trapped in the financial system, right? So if you look at when we talk about inflation, it's always important to differentiate between, your kind of true consumer price indices, which track things like not only real estate, but also, food and your everyday expenses, versus asset price inflation, which again, if you've been sitting in the markets, pretty much any market at this point over the last, decade, you've seen some pretty handsome returns, especially if you've been sitting in U.S. assets. So there has been a lot of inflation, but it's been much more on the asset price side, because again, a lot of that money that was injected into the system got trapped, so to speak, within the financial system and not necessarily translated into, the average consumer's hands. So you can design some really interesting kind of unconventional monetary policy tools where, let's say, everybody who had a wallet or an address with, the central bank, because now they have a central bank digital currency, let's say the Fed could basically drop in maybe $1,000 or a certain portion of somebody's income into a digital wallet, and then basically put, an expiration date on that and say, if you don't spend that within the next 3 months, that's basically evaporated, right? So it's almost like literally helicopter money, which again, given the world in which we're in with, $17-18 trillion in negative yielding debt, those types of policies that were once thought of as, almost, I want to argue barbaric, but just something that certainly was not really, in the cards, I think is certainly coming now onto the table as a potential policy decision, because again, the amount of ammo that central banks have, this potential coming, recession and hopefully not financial crisis, but downturn, is certainly a lot less than they had, in previous instances.
Well, certainly well put, and thanks for instructing us. I learned a lot when I talked to you about this. It's clearly evolving, and just for the record, I wasn't advocating for smoking tobacco. We used to use it in the colonies as a medium of exchange, so that's where I was going before I get all.
Hey, we'll get to a world where the medium of exchange is up to you, Jeff.
Well, I don't want any control over anything. Kevin Kelly, co-founder with Delphi Digital. Thanks so much for joining us this morning. Have a great rest of the day, great rest of the week, my friend.
Thank you, you too.
Well, folks, that wraps up this episode of BRN AM. Have a financial topic or someone of interest that you think we should interview? Drop us a line. And don't forget, For more news related to retirement markets, technology, personal finance, and so much more, check out today's edition of The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Keep on saving, and don't forget, roll with the changes.